Gold back below $1,800. Oh, it's not easy to be a gold investor, but maybe some consolation. I did see a YouTube thumbnail that said Rick Rule is buying gold and silver stocks, so there may be light at the end of the tunnel there. He does tend to be good at measuring sentiment. And I was looking, Fortuna, one of my sort of gauges of the, say, silver stocks, it was down in like the $4.75 region after being up at $12 earlier this year. So they have been beat up, the silver gold mining stocks. You have to have some trepidation wading into that area as, we're talking like 10 years here. Newmont's at $55. Barrick, and these are on the U.S. markets, Barrick's at $19.79. Franco-Nevada, at least, is at $141, but even Franco hasn't really done anything since, a year and a half, 2 years ago. So, a year and a half ago, when we had that run-up in gold after COVID. And then everything went back down, then it went back up, and now it's kind of half back down. So let's see. A tricky trade, but I think it does tempt, doesn't it? It is a tempting trade, especially as everything is kind of, seemingly overvalued right now. And that's what I like about gold over Bitcoin, and I do prefer Bitcoin, but what I like about gold, what it can't do, is you can hold gold in your hand. Like if something were to happen to the internet or, there's something irrefutable about gold. When you hold it, it has lasted 5,000 years. We cannot discount that. So I think an interesting time to consider these things, despite the drop below $1,800, despite the drop in silver here, you do get the sense that there is a bit of bullishness that is starting to enter a very bearish mining stock sector. Looking at the 10-year bond, it's up at 1.655. So it is starting to be at the upper range of recent yields that we've been looking at. And they had fallen from earlier yesterday and it says here after the Powell renomination. So Jay Powell was renominated to the Federal Reserve. Now, this brings me to a small point that kind of surprised me a little bit. I was listening to a commentary, I think it was on Real Vision. Interesting guy, I don't remember his name. But he was basically saying how, the Fed's biggest fear is wage inflation. And I thought, is that really their biggest fear after wages have remained stagnant for decades, since the 70s? And now they're concerned that we might have a little too much wage inflation? And it really just sort of made me think, like, maybe we do need to rethink this whole Federal Reserve thing. Maybe this isn't such a great idea. Maybe it's not working out so well for people. Because if that's our biggest concern, that wages are going up after 3 decades, then I really just have to question the whole thing and just wonder, like, who is this really working for? And you guys can look at your academic papers, you can have your abstractions and talk in your think tanks all you want. If wages are stagnant for 3 decades and your biggest concern is that wages are going up, perhaps you should re-examine your first principles and what you are doing here. Just a thought. So, but it just really, I was taken aback. Let's just say that. Anyway, the Global Mining Symposium was fabulous. I had a nice talk with Anthony Malowski. Anthony Vaccaro interviewed Mark Bristow, and there were lots of other big segments, the rare earth element segment. So we have lots of exciting stuff to present to you for those that missed it in the coming episodes. So I am not going to go over the Global Mining Symposium stories because we're actually going to take them one at a time into the Christmas season here. And we are approaching Black Friday and Thanksgiving, American Thanksgiving. So happy Thanksgiving for all our American listeners. And, I have American friends here in Berlin, and so I'll be going to a dinner. But I tell you got to be careful. I almost don't want to go, even though I can't wait to go. My semi-rich friend loves to have a fantastic, turkey, ham. He goes over the top with that. Americans love Thanksgiving. So I want to go, but man, these COVID cases in Germany are flying through the roof. They are, where you had the health minister out there saying by Christmas, you're either going to be vaccinated, recovered, or dead. That's what Jens Spahn was saying. So pretty dramatic stuff here, and everything remains open. I was going for a walk with a friend outside yesterday. The bars are, on a Monday night, there were a fair amount of people in the bars, doors closed, no masks, and I just thought this is not going to end well. But maybe you think different. It's become a political controversial issue, so we're not going to wade too deep into it. Anyway, we have a very exciting show here. Henry Lazenby, our multimedia producer and reporter, has interviewed Ross McElroy from Fission Uranium. And Fission Uranium, I used to own that stock way back in the good old days in 2011, 2012. And there was some controversy around Fission for a while. I think Dev Randhawa. And I don't know what it was, and maybe it's just unhappy shareholders. I don't know what the controversy was. Dev was always very nice and gracious to me at PDAC. I don't know if it's because I was a reporter or just he's a really nice guy. But there was controversy in the past with Fission, but I believe he's left the company, Dev. And yeah, so we got Ross, and Ross seems to think that the company is on the right setting. They have a lot more institutional investment. So you'll get a very in-depth, almost like if you're interested in the geology and if you're like almost an analyst for Fission Uranium, you're going to want to listen to this because Henry doesn't pull any punches as far as the nitty-gritty of this project. So that is coming up. We also have Kim Tyler in our CEO Spotlight coming right up from Stratabound Minerals, and he's got a project in California, the Freemont project, and a couple of projects in Canada. So we are about to take a look at that very interesting interview and some great stories. So hope you're having a wonderful time as we enter this very busy time of year. Markets just remain, kind of waiting for that Santa Claus rally. Let's cross our fingers that we get it. And with that, if you want to find us online, you can find us at northernminer.com. You can find us on Twitter at northernminer. You can find us on Instagram at the Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts and wherever podcasts are available, including Spotify, Stitcher, Apple Podcasts, and SoundCloud. And with that, let's turn to Kim Tyler and Stratabound Minerals in our next CEO Spotlight.
And joining me today for our CEO Spotlight is Kim Tyler, President and CEO of Stratabound Minerals. Kim, welcome to the program.
Thank you, Adrian. Pleased to be here.
It's great to have you. So, from what I understand, you have a few projects, and they seem to be North American based. Tell us, what are you working on? What are you excited about? What's going on at Stratabound Minerals?
Well, we're most excited with a recent acquisition we just concluded in October, is the Fremont project in California. And I'm going to say quickly that we've been an exploration company for the past 5 years. We're really mine operators and builders, and that's our background. And we've been looking for an asset, a string of assets. We're early stage 2 operations. So it takes a bit longer to find a nice brownfields operation like Fremont in California. Follow the footsteps of Equinox down there. We've been looking at California for 5 years and finally acquired a property at Fremont. But that's the one we're looking for. It's got nearly 1 million ounces of 43-101 ounces on it. That catapulted us from 0 ounces prior to this October acquisition to that amount of ounces, and that's where we want to build forward, get out on the ground and push that forward to production. And finance our company are exciting, but longer term assets through our own cash flows.
Interesting. So I assume that is a gold property.
Absolutely. Okay. Absolutely. So historically, Stratabound's been around since 1986. It's been in base metals in New Brunswick. It's got a long history of exploration there. But we shifted gears in 2017 and brought more people on board, and it's been focused on gold for the most part. We still have some legacy copper, cobalt with a bit of gold in New Brunswick, a small project there, which has a custom milling opportunity, toll milling opportunity. We think that's good, but really we're focusing on gold, and we're a lot of experience in gold and a variety of commodities, but gold's been the core of what we do the best.
Okay, so tell me about this Fremont project then a little bit more. I feel like I've heard of it, and it's based in California. And tell me about, how do you feel about working in California? I mean, some people might take a pause and think, oh, well, is that going to cause a challenge for you?
I love that question because that's more of a myth. I think there's truth around that. Maybe 20 or 30 years ago, notion of California like we have BC. You think the local people are opposed to mining, and that's a thing that mining industry has got to work to turn around anywhere. But I'm an Ontario boy. I've worked at Inco when I was 18, and I live in Sudbury still now. It's my home. But Ontario and Canadian jurisdictions where the regulatory regimes are all provincial at the provincial seat. In California, they start off at the county seat. So you're dealing with the local people. They have a vested interest in seeing who their industrial neighbors are going to be. And it doesn't mean they take shortcuts. So their regulatory requirements are no less stringent than we have in Ontario. But in Ontario, or I should say in Canada, provincially, it becomes politicized. And that's where mining's gone from a place where it's a quiet industry that brought metals and minerals that everybody needed and manufacture. But down there, it's less so because you're dealing with the local group, and there's still those things that might happen. But Equinox is an example of things moving forward. I'm going to say last thing is we've got 3 excellent California professionals, geologists that are with us. And one fellow is the master permitter in California. He permits not just gold mines or any mines. He's permitted chemical plants in places. So he's a terrific asset. He's in our advisory team, which the news going forward will be commenting, posting who these guys are on our team. So we've got some really qualified people down there that are going to get us through it. But I say that it's gotten tougher, and I think all my colleagues will say that anywhere in the rest of the world, it's gotten tougher and tougher permitting wise. And California has pretty much stayed the course in terms of how they manage it as anywhere else in the United States.
It's almost like the rest of the world is catching up to California in terms of the permitting and just like, the stringency with which they look at their local mining company.
Well, exactly. And I think the pendulum always swings one way or another. And I think it's really swung way too far. And that's me personally. You might find others. But we know that it's taking a long, long time and a lot of scrutiny and oversight on mining projects. And the one example of high politicization would be the Ring of Fire. And I think it's a terrific opportunity, but it's going to go on forever, where it's got less to do with what makes sense and more to do with politics.
Sure. I mean, yeah, and we could go on and about that.
Yes.
That's almost a whole other topic. But now,
Pebble's another one. I mean, you got to look at these. Pebble's another one you might wonder, but there you go.
Oh, well, Pebble. Yeah, I mean, Northern Dynasty, we make fun of the soap opera of the Northern Dynasty soap opera there. Now, tell me just about, before we move on from Fremont, like how big is this thing? Do you guys have like a clue as to how many, I don't know, ounces a year you might be able to get out of this thing? Or
we certainly have a big clue on that. We aren't going to publish it because it's going to get ahead of the story here, but we've done our own, there's about 20 million tons on the books right now, and it's low grade at the indicated about 526,000 ounces at 1.6 grams per ton. It's viewed as an open pit. It was mined historically underground. This is what I like about California for opportunity. A lot of the mines in the Western U.S. shut down in World War II at $35 an ounce and never reopened. And in those days, they were operating old-timey methods and high grade. And there's 2 veins, footwall and hanging wall, that they mined historically at a quarter ounce, which is standard. But what was left behind is refining out in the Abitibi, and Osisko's making great waves up there in Quebec, and then also the Hollinger open pit that Newmont's operating for a long time. These are the low grade that sits around the high grade, and that's what we see the same thing down in California. So that's the opportunity we're looking at down there as well, expanding out. But what I say, 526,000 ounces indicated, about 450 some thousand ounces inferred. We believe there's way more than that. The mining went down to 700 meters, and the block model only goes down half that deep. So we see with more drilling, we can expand on the ounces, huge. But really where we're targeting here is we really want to get going on very small scale, low risk mining opportunity, like almost a bulk sample, and then build that out into a bigger operation over time.
Very, very interesting. So you have some properties in Canada. Tell us
Yes.
about those. What's going on over here?
Well, again, getting back to Stratabound, the new Stratabound in 2017, I had been working for another company as a consultant for a few years, and my one job was manager of North American evaluations from East Coast to West Coast. And I really came across a property I really liked in the Eastern Yukon. A lot of excitement in the Western Yukon with white gold and so on, and the coffee zone. That's in the Western Yukon. But in East Yukon, it's quiet, but everywhere there's groundwork, there's gold, and the market got quiet anyway. But one thing intrigued me huge is a property owned by prospectors about 20 kilometers north of the Three Aces project. And the Three Aces was a 5,401 gram per ton discovery in 2003. So this is another new area people aren't looking in, and that's kind of where we're going, is places people don't look at. We picked that property with prospectors in 2018. We've raised $1 million. We've spent about $3 or $4 million in there now, drilling and it's got a highway right through it. It's called a highway. It's a gravel road, but it's an all-season road. Goes right through the middle of the property, and we've got results up to 95 grams per ton. Actually, 320 grams per ton lying on surface from float samples, and drilling up to 60 grams and trenching up to 95 grams. So it's an exciting project. But as I point out to you, we're miners, and we're looking at what are we doing this for? Are we out there to continually publish these results and when markets are weak, and hopefully you get catch at the right time? We really want to be operators, and understanding that it takes a long time to get an exploration project, an early stage one like this one, to production, is why we've moved towards to acquiring an asset that we can get into production in short order. We also have a nice project that I got to comment on. I think you really ought to look at Puma exploration. If you're looking at Stratabound, look at Puma and look at the results they're getting in an area nobody's been looking at very much except prospectors. And you can't beat the prospectors for finding these deposits that the Barracks and the Newmonts are going to want one day. But they recently published a result of 5.5 grams over 50 meters. And if that was anywhere else, that stock should have gone through the roof, I would think. But they got sold down 17% on that news, and I still don't understand, but that's our quirky market. We're right on strike with them. We're very early stage. We've done some soil sampling. We think we're in a belt of rocks that will take you right out to Newfound Gold. It's the same rock, same age, same kind of structures, and it goes right across the ocean to Kurganalt and Dalradian. If you follow our website, you'll see a lot of people have that one slide that shows the same geology all the way across these deposits being formed at the same time about 350 million years ago.
Interesting. So when you say you're operators, does that kind of mean that as far as if we were to kind of look at your mission as a company, you want to be a big mining company, or at least a mid-tier mining company, right? Like you're not looking to just make some fancy drill holes.
No, we're not going to make fancy
get taken
drill holes.
out. Yeah.
We're well aware that people are putting out lots of nice drill holes and not getting rewarded for the market on it, and that's not what we want to do anyway. I mean, the market should do its job, and whatever it does, it does. We can't control that. But we do know the things we can control are what I like to see is harvesting ounces or whatever pounds of metal out of the ground, and providing decent cash flow in the company, maybe down the road dividends. We've all worked for big companies in the past. I've been with Rio Tinto. I was a mine manager for Rio Tinto company for 5 years. Two of us were with Royal Oak at the very beginning, and Royal Oak has got, you love it or hate it, but it was a very big company with 1,400 people and several mines around North America operating, and got caught in a pinch and down it went. But we've seen the good and the bad. Cominco was a company some of us have worked for, and it was a wonderful company that got taken out by tech. This is one of the best companies you're going to work for. Some of the best people have come out of that. So we know how to operate mines. We know how to generate cash flow. We know how to operate them efficiently and effectively. We've been there, done that. Getting back into exploration in the latter part of our careers has been fun. We don't necessarily have to do this for the money anymore, but we do it because it's fun. And the next thing we'd love to do is say, hey, there's a niche here of companies that the big companies won't look at anything less than 1 million ounces, and they're gobbling each other up. We hear about mergers and acquisitions at the top of the food chain all over the place. You don't hear enough news about the little guys doing it, like us, like we just did. That needs to be done too. We had two companies. One was stuck without cash, had a nice asset, and we had some good assets, but not near stage enough. We had cash, so we put them together, and that made good sense. Now we're going to build, because we see the Newmonts and the Goldcorps, we're down the road. There was somebody started those companies from nowhere, and Rob McEwen did that with Goldcorp and the old Dickinson mine in the beginning. So if he can do it, we should have a lot of fun trying to get there. We may never get the whole way there, but it would certainly be fun building the next mid-tier producer and see where it goes from there.
Well, it's like they say, skate to where the puck is going. And because I see Barrick and I see Agnico, and listening to their conference calls, there's a strong emphasis that the strategy is exploration, and particularly in Canada. And I guess North America is probably seen as, US is probably seen as, if not as good, nearly as good. So it sounds like you guys are kind of positioning yourself for where things might go. So thank you, Kim Tyler, President and CEO of Stratabound Minerals. Could you tell us your website as well as your ticker?
Our website is www.stratabound.com, and our ticker is SB on the TSXV, and we're also listed on the OTCQB listing in the States under SBMIF. Excellent.
Kim Tyler, thank you for joining us, and come talk to us again.
I'd love to. Keep watching, because we have plans to move forward for sure. Thank you very much.
And thank you to Kim Tyler, President and CEO of Stratabound Minerals, for sponsoring this week's CEO Spotlight. Turning to the website, Newcrest says its growth strategy is America's focused. And this is by Henry Lazenby. Australia-based Newcrest Mining is building critical mass in Canada with the second significant acquisition announced as the mining major sets its sights on organic and mergers and acquisition-based growth in the Americas. Managing Director and CEO Sandeep Biswas tells the Northern Miner, in 2019, Newcrest took a 70% interest in Imperial Metals, Red Chris copper gold mine in northern British Columbia, and more recently, the $3.84 billion acquisition, Canadian, of Pretium Resources announced on November 9th to gain control of its high-grade Brucejack operation in British Columbia. And you also hear Barrick's Mark Bristow talk about the focus on Canada, and Agnico is Canada-focused, or at least exploration-focused, with most of their projects in Canada. So quite interesting, this, Canada is definitely attracting the top mining companies, at least the top gold mining companies, which is quite interesting. Quote, Newcrest specializes in what I call Tier 1 deposits. End quote, Biswas says in an interview. We have a clear strategy where we want to continue to gain exposure to Tier 1 deposits, which in our terminology is typically 300,000 plus ounces per year equivalent, comprising copper, if available, and gold. Now, I don't have Mark Bristow's definition of Tier 1 deposit in front of me, but I don't think it's the same as this. I don't remember anything being mentioned about copper. If you recall that article we recently covered, I can't remember, I think it was the conference call. Bristow was saying that he came up with the term Tier 1 deposit, and it had a very specific definition, so it's kind of hilarious to hear the Newcrest CEO come out and say, well, actually, this is what I mean by Tier 1. So, an interesting little tidbit there. Further, the company has a penchant for long-lived assets, typically 15 years or longer, and assets also must be low cost, with the ability to go into the first quartile range. I don't know what that means, according to Biswas. With the ability to go into the first quartile range, feel free to leave a comment if you know what that means. Quote, if you look at Brucejack, it fits all the criteria, and it's in a Tier 1 jurisdiction as well, which gives us some geographical spread and reduces the geographical risk as well. And the other thing that's good about Brucejack is its exploration potential. I mean, we are explorers. It's in our DNA, said Biswas. So you can read the whole thing on northernminer.com. We're just scratching the surface there. And continuing on, we have another move by Australia's Evolution Mining. So not sure what's going on in Australia, but they are on a tear. I mean, to be perfectly fair, if we saw China making all the moves that Australia is doing, we would be all our antennae would be up. Here's another one. Glencore to divest interest in Ernest Henry Mine with sale to Australia's Evolution Mining. It's by Daniel Sekulic. Swiss commodity giant Glencore is selling its stake in the Ernest Henry copper gold mine in Queensland, Australia to Evolution Mining for $916.5 million in cash. I mean, also to be fair to Australia, I mean, the mine is in Australia, so I don't know if we need to feel too concerned about that. But nevertheless, it's pretty interesting, all the moves Australian miners are making. Evolution will pay Glencore $800 million Australian up front and the remaining $200 million Australian after 12 months. The companies believe the transaction will close in early January 2022. Under the terms of the transaction, Evolution will assume full ownership of the mine. It has also entered into a copper concentrate offtake agreement and separate ore tolling agreement with Glencore. The two companies have worked in partnership for the past 5 years at Ernest Henry, which commenced operations as an open pit mine in 1998, before transitioning to an underground operation in 2011. And scrolling down, we have a quote from Gary Nagle, Glencore CEO. And he said in a press release, quote, Evolution has been a strong partner in the Ernest Henry mine for 5 years. They share our way of working and commitment to operating responsibly across all aspects of the business. And Evolution's executive chairman, Jake Klein, said, quote, we are proud that it will once again be 100% Australian owned. The acquisition is consistent with our strategy, materially improves the quality of our portfolio, and delivers both strong cash flow and mine life extension. So read all about it at northernminer.com. Just look for the Ernest Henry Mine. I don't know how they got the name for that mine, but perhaps time for a rebrand. But anyway, no, all good over there. Continuing on, EPA issues draft Florence underground injection control permit decision. Now, this is by Henry Lazenby. The U.S. Environmental Protection Agency has issued a draft decision on the underground injection control permit required for Taseko Mines to build a commercial-scale solution copper mining operation at Florence, Arizona. Now, I don't think this is the first time Taseko has run into a little bit of controversy with their mining practice, and I think they have a little bit here. I've seen the locals aren't thrilled, at least some of them aren't thrilled about Taseko's plans here. In a press release issued on November 22nd, Taseko said its project technical team would complete a review of the permit wording within the 2-week allotted time frame, following which the EPA is expected to commence a public comment period, probably only in the new year. Taseko President Stuart McDonald said detailed engineering and procurement activities were well advanced, placing the company ready to start construction of the commercial facility immediately upon receiving the final. So the company will be ready if the permit is delivered. The company expected the draft decision by June, before the timeline slipped to sometime in the third quarter. Okay. And we have a quote from Stuart McDonald, Taseko president. Quote, "The Florence Copper Project will have one of the smallest environmental footprints of any copper mine in the world." And it says here, the Vancouver-based miner plans to inject sulfuric acid and water deep underground to extract the already naturally broken up mineral deposit, a process that some erroneously compare to oil-field fracking. Uranium miners in rural Australia and the U.S. have used the method for decades, but in situ leaching has rarely been applied to copper mining. Worried about potential groundwater contamination, officials in Florence, Arizona have tried and failed to block Taseko's project for almost a decade. An appeals court earlier this year put an end to the town's legal obstructions, which included an attempt to take Taseko's land via eminent domain. You know, it doesn't appear that Taseko has the social license. You know, they may have all the legal license, but if you don't have the social license, you're probably going to keep running into problems. Anyway, so kind of an interesting development there in Arizona. This is from the Global Mining Symposium. I did want to tackle this one, Making Mining Cool to Attract New Talent. This by Northern Miner staff. And if you ask Rob McEwen, Chairman and Chief Owner of McEwen Mining, what needs to happen for the industry to attract young people and present a career in mining as cool, the answer is pretty simple. Quote, "We need the public to start doing the math," end quote. McEwen said at the Northern Miners Q4 Global Mining Symposium this week. Quote, "We have to calculate how much metal is needed to build the electric vehicles and the wind turbines and solar cells that are required to reduce greenhouse gas emissions and limit temperature increases to 1.5 degrees. The industry has to, quote, make the link for people because we're not going to get there without a lot of metals." So Rob McEwen thinks we need to focus as an industry on the environment. And I think there's something to be said for that. I mean, look at the uranium industry, how successful their campaign to say, hey, we're the solution to greenhouse gas emissions. I kind of think that's been a pretty powerful argument, which has actually changed the minds, I think, of many people out there. I've talked to normal, regular people that aren't particularly, savvy in mining and financial markets, and they're actually quite receptive to nuclear, the average person, whereas 10 years ago, generally these same people would not at all be receptive. So pretty interesting. We also have more here. We have Professor Erin Bobicki, an associate professor of mineral processing at the University of Alberta's Department of Chemical and Materials Engineering. And she views working in the industry as an opportunity to make a big difference in the world. Quote, "How do we extract critical metals more efficiently? How do we use less water and energy? How do we reduce our impact on the environment? This opportunity to make a big difference, quote, is only going to get larger as we move towards electrification and decarbonization. So this is a fascinating time to be working in the industry," she said. For McEwen, the allure has always been working in an industry that, as he puts it, quote, is shaping modern civilization and is, quote, what first attracted me to become involved in the investment side of the industry. Well, quite noble of Rob McEwen. I mean, I got into this industry for the gains initially. I always saw an opportunity potentially to get rich quick on these junior mining stocks. But I guess Rob McEwen was more into shaping modern civilization, to his credit. Quote, although there are a lot of young graduates jumping into the investment banking industry or cryptocurrencies, there are a lot of them jumping into the mining industry too. And if you want to be involved in shaping the future, the mining industry is a great place to start. Well, this is definitely against the conventional wisdom. I mean, I would say if you want to shape the future, you're probably going into crypto. Not to be too provocative, but yeah, I mean, this is definitely, I think Rob McEwen is being quite provocative here. I mean, if you want to be involved in shaping the future, the mining industry is a great place to start. I mean, I think we see his rationale, but I don't think people are thinking this way at all. And I don't think, I just hear of the problems that the mining industry has in attracting young talent, not that they're jumping into the mining industry to shape the future of civilization. But that's just my 2 cents on this. According to Professor Bobicki, the key to attracting a new and diverse range of talent into the industry is to, quote, create a variety of opportunities for working with new technologies such as drones or robotics, and to innovate by offering exciting new opportunities for lawyers, investors, mechanical engineers, and artists. You know, there is an opportunity there. Like, I don't see why mining companies don't have artist residencies. I have run into many artists, like at least a couple, in Berlin here, who are excited about open pit mining and just they like the visuals. They just find it interesting. And so I'm sure there'd be a lot of takers. You get some pretty serious people. How cool would that be, having a resident artist at your open pit mine? I think that's good for... That's good PR. That's good for just reaching out to society. Just a thought there. In light of the COVID-19 pandemic, she says the mining industry, quote, also needs to step up and offer remote or hybrid working environments and make people aware that these opportunities exist so we can pull in the talent we need to drive the industry in the direction it needs to go. Absolutely. If you want to attract young talent, I mean, everybody that I know, my age and below, even I think older, but they all want the hybrid, if not the remote working. And there's a lot of movement, just anecdotally, from people I know who are starting to make moves in their employment. It's quite interesting. And as far as this whole employment, we were talking about wage inflation earlier. And I watched a lecture series on the Black Death, and I think it was 1347 to 1351 or 1349, 51. There's a couple of years where it was really bad. And afterwards, there was a huge inflation for workers. All those, serfs that were working, tilling the fields, a lot of them left. And the lords and the people that ran those properties apparently had to pay much more for these workers. And it's seen as a seminal event in economic history. So I don't know if the Fed is factoring that in, and I don't know if like a loosening or a tightening or anything is going to change the fact that people are reassessing their lives in the face of a fatal disease, of a plague. That's what's going on. So I don't know what the Fed can do about that. So good luck with solving wage inflation. And I think it's questionable that that should even be solved to begin with. But we've already discussed that. So those are your news stories. Now let's take a look at metal prices. And turning to metal prices, we'd like to thank our friends at mining.com/markets for providing us with these prices each and every week. And on November 23rd, gold is trading at $1,797.12 per ounce. That is $67 lower than last week. Silver is trading at $23.90 per ounce. That is $1.40 lower than last week. Platinum is at $1,004.60 per ounce. That is $81 lower. And palladium is trading at $1,912.05 per ounce. And that is $198 lower than last week. And turning to our industrial metals, copper is trading at $4.36 per pound. That is 11 cents lower. Aluminum is trading a penny higher at $1.21 per pound. Lead is 7 cents lower at $1.01 per pound. Nickel is 6 cents higher at $9.06 per pound. Tin breaks $18 at $18.03 per pound. That is 27 cents higher than last week. Cobalt is also higher at $27.67 per pound. That is 82 cents higher than last week. And zinc is 4 cents lower at $1.46 per pound. What do we see? A slight dip in the precious metals, and industrial metals really on pause, some higher, some lower, basically consolidating. Nickel at 906, tin at 1803, and cobalt at 2767, and zinc also being pretty high at $1.46. So industrial metals remain elevated, and those are your metal prices. And coming up, we have Fission Uranium President and CEO Ross McElroy in conversation with Northern Miner, multimedia producer and reporter Henry Lazenby, and they go in depth into Fission Uranium's Patterson Lake South project and the Three Arrows deposit and the outlook on uranium and how it's affecting Fission's business. So very interesting interview, particularly for you uranium bulls out there. I hope you enjoy it, and I will see you on the other side.
Good day, and thank you for joining me. I'm Henry Lazenby, the Northern Miners multimedia producer. Joining me today is Ross McElroy, President and CEO of Fission Uranium, with the TSX symbol FCU. Welcome, Ross. It's good to have you here.
It's great to be here. Looking forward to our discussion.
So let's throw it back about a decade. The uranium price has been in the doldrums since the Fukushima disaster of 2011 in Japan, leaving spot prices crawling steadily lower and sideways below $50 a pound since 2015, more or less. For the benefit of our listeners, would you please remind us where your flagship Patterson Lake South project is and what it entails as it stands today?
Sure. So the Patterson Lake South project is located in the province of Saskatchewan, on the southwest side of the Athabasca Basin. So basically sits right almost dead center in Canada. The Athabasca Basin, just for some context, is an extremely important supplier of uranium to the world, has been for decades, and, continues to be so. So, we're another discovery in a phenomenal chain of, high-grade deposits that the Athabasca Basin is famous for. We're a little bit unique in that we're in the southwest side where up until our discovery back in 2012 of the Triple R deposit, it's been virtually an underexplored or non-explored area. And I think that, the general consensus was that there may not be uranium there similar to what you have on the eastern side of the basin. Well, that's completely changed now with the discovery of our Triple R and, for that matter, Next Gen and the Arrow deposit. With these deposits, we're seeing grade and size every bit as good as we've seen on the eastern side of the basin. So I might conclude with saying that I think that this is where the future of mine development is in the Athabasca Basin, is the southwest corner. I think keep your eye on that area. That will be the key producer of the next generation of mines in the Athabasca Basin.
So the company completed a pre-feasibility study on the project in 2019. Could you just briefly remind us about the highlight key points there and how that sets up the project in combination with your latest winter and summer drill programs to contribute to your feasibility study, which is underway?
Sure. Well, the Triple R deposit is 100% basement-hosted, near-surface, high-grade uranium deposit. Why the basement part is important is because the basement's much more competent rock. The history of mining in the Athabasca Basin's been typically at the unconformity. The unconformity is right at the base of the Athabasca sandstone and the basement rock, and it's at that interface where a number of the high-grade deposits are developed. The problem with that is there's some technical challenges because the rock conditions at unconformity tend to be, very soft and prone to flooding and, and other mining issues. Basement rock is much more competent, And we're fortunate that we are 100% in basement rock and we're near surface. So that's what really sets this project apart. The PFS study that we did shows that we'll develop the Triple R deposit as an underground mine, but near surface, mineralization starting at 50 meters below. But because it'll be underground, we'll access it by a decline through the overburden. And once we hit the bedrock, that's where the ore sits. So there will be no disruption of Patterson Lake itself. It will be accessing the ore zone from the land with a decline through the overburden and then into the bedrock. You know, the pre-feasibility was completed in 2019. Very robust economics. You know, from every metric, it's an absolute world-class asset. There's still a lot of room to grow. And so the drilling that we completed here in 2021, we tested on the 780 zone, which is the main part of the deposit, and that's the one that sits in the pre-feasibility. That's the guts of the pre-feasibility study. We did do some drilling this winter, put 20 holes into the 780 with the aim to convert approximately 4 to 5 million pounds of uranium that's currently inferred and outside of the economic study, bring that into the resource. But I think importantly too, we tested the 840 West zone with the aim that we'll be able to bring it also into the feasibility study resource into the economic category. And that's why we put in 25 holes into the R840. We're still waiting on assays, but if we're successful, then the R840 zone has the potential to also be part of the economic mine plan as we go forward through feasibility. So it's been a really active year, a lot of drilling, a lot of work, but we're well into the feasibility study now and quite pleased with the results so far.
So can you just remind our listeners, what does the current resource base entail? And so anything that might be forthcoming from 840 looks to expand upon.
Yeah, the indicated resource that was used in the pre-feasibility study was about 100 million pounds. And if we're able to bring in the 840, we know from a resource perspective, an inferred resource, that it has 15 million pounds. So if we're successful at our conversion from the inferred to indicated and the 840 can bring it over, that's an increase of roughly 15% right there to the economic resource. And likewise, on the 780 drilling that we did, we'll be able to add another 5 to 10%, depending on how that shows out. So potentially the drilling that we've done in 2021, I think might be able to add 20% or so to the current resource. And what that will give us is increased mine life. From what we've seen in the pre-feasibility study, we started at 7 years. So this will be additional material that could basically extend the mine life. What I'm looking for is aiming towards 9 to 10 years of mine life. I think that's what we'd like to see at the feasibility study.
Right. Well, a key takeaway for me is the continued exploration momentum that you are demonstrating there.
Yes.
So let's just quickly consider the larger property. Patterson Lake comprises a really large land package. Do you have any regional prospects that are a priority at this point, or is that more of the upside that you reserve for later in the project's life?
It's a great question. We do have a very large land package. It is extremely prospective. Just going back to looking at the potential of the area, there's probably about 200 kilometers of conductors. It's all these EM conductors that this is what geologists love, and these are your test horizons that you have. Each one of them has the potential to host, a deposit scale occurrence of mineralization. So we've barely begun to systematically test the rest of the property. We were so successful early on when we first started exploring the Patterson Lake South property back in 2011, 2012. We quickly honed into what's now called the Triple R deposit. So we still have a great number of exploration targets on the property. And I think as we're seeing improvement in the uranium sector, we'll probably have another look at doing some exploration in the near term on the rest of the property. But our eye is really on we're keeping our goal as moving the feasibility study forward. So, maybe we'll be able to work both things at the same time. But the aim right now for me is getting the feasibility, moving it forward, and all the permitting and other elements that go in, with getting the Triple R deposit closer to production. But I'd be quite excited to start doing some exploration on the rest of the property as well. And we have the team and the property to do it.
I can imagine you're keen to get out there again. So let's talk about the catalysts for the company and the associated timelines towards achieving them, please.
Sure. The first goal for us was to raise some money. We over the last 12 months, we've been able to raise around $50 million. That's given us a good start now, and I think we're sufficiently funded to go through the whole feasibility study. Once we had money, then I could start building a team. And so I hired a VP of project development back in January. That's Gary Haywood. So he's our new project lead. He's a mine engineer with a wealth of experience in the Athabasca Basin, ex-Cameco, ex-McArthur River engineer. So Gary's going to be our lead as we move the project forward through feasibility. And so, it was really all about building the team and getting us moving forward. So I think we've accomplished that in the last 12 months. It's busy. We recently signed Tetra Tech to be our lead engineering consultant. They'll be the author of the feasibility study. And timelines, we expect to complete the feasibility by the end of 2022. So that's the phase we're in right now. Parallel with that, of course, is all the permitting and agreements that will have to do with the northern communities and the First Nations and the Métis. So we have teams that are already working in that capacity as well. So there's a lot of moving parts, but I think we're very well established here with a great team with great depth of experience, and of course the rising uranium sector. It's a good place to be right now.
Yeah, that's a great segue into my next question about the general uranium price and the market. And how do you see that, playing out at the moment, as relating to the project?
Well, we've seen the price of the commodity. It had been skipping at some pretty low prices in the 20s and 30s for, the last several years. Last fall, the fall of 2020, we really started to see a shift. And I think it's, part of the global emphasis on clean, green energy and the recognition that nuclear is such an important part of that component. It's a clean energy, and it's really the only viable alternative to, fossil fuels in a number of cases, certainly for baseload power. So the sector has certainly improved an awful lot in the last, we'll call it 12 months or so. The prices, we've seen spot prices over $50. It's currently around $40, but it's a lot healthier than it was just 12 short months ago. I think that the overall path is certainly higher than that. I think we're expecting much stronger and sustained, consistent higher uranium prices going forward. So, it's a right sector to be in. And I think that our project at the development stage that we're at, feasibility, you probably couldn't pick, a better timing, I suppose, to have a project like this that we're marching forward through development, because we see the next several years out as being extremely strong and bullish for the uranium sector, and having a world-class project like Triple R that will, we expect it to be one of the lowest operating cost mines in the world. It's a nice place to be.
I certainly see there's merit in being interested in Patterson Lake South at the moment. Is there any other important points that we should talk about that I've not asked you about specifically?
I think we've touched on most of it. I just, I would emphasize the fact that we're, we've got a superior project. We've got a really strong team. We've got money in the treasury, and and we know the path forward, and we're marching on towards. So that, all coupled with a stronger uranium sector overall, I think that it's time for people to really pay attention to the uranium sector in general, and I would think that we certainly have one of the best projects out there.
Before I let you go, let's just quickly talk about the company's share structure and also key shareholders and how that is positioned to help the company forward.
Over the last, again, 12 months since we started to raise money, we've also increased our institutional ownership as well. So, maybe in the summer of 2020, we were well below 10% institutional ownership. We're now almost a quarter of our shares are owned by institutional investment groups. We also have a strategic partner with China General Nuclear. They have a 15% holding in the company. And retail side is about 60%. So that's sort of the breakdown of where we are. We're a much more balanced company now with institutional and retail ownership, I suppose, than we might have been a couple of years ago. As I mentioned, we have about $50 million in the treasury, and the market cap right now is somewhere between $500 and $600 million Canadian.
All right, excellent stuff. Thank you very much for your time. That was Ross McElroy, President and CEO of Fission Uranium.
And there we have it, another episode of the Northern Miner Podcast. Stay tuned for very exciting feature presentations from the Global Mining Symposium. We got Mark Bristow, we got World Class Rare Earths panel, and more. So do stay tuned. If you want to help out the podcast, leave us a review in the Apple Podcast directory. Send it to your friends. And until next week, take care.